You're paying for stock research, but is it actually making you money or is it just feeding you noise? That's why I tested Zacks and Morningstar and Motley Fool and Seeking Alpha head to head. Each claims to be your edge in the market, but only one of them stood out to me. Let's take a closer look. Before I even spent a dime on any of these platforms, I dug into what the other users were saying first. Both the good and the ugly. I always start with the negative reviews first, because those are usually the ones that people try to sweep under the rug. If I'm trusting a platform to help me invest real money, I need to know what can go wrong. And with Seeking Alpha, one user shared a frustrating experience. He signed up thinking that he was only paying $4.95 per premium, but was later billed over $500 for alpha picks. Apparently, there was a small checkbox buried in the checkout page that authorized the charge. He tried to get a refund, but was denied. I get the concern here. No one likes surprise charges, especially when it feels like a bait and switch. But looking closer, this seems to come down to misunderstanding the checkout process. I mean, I've subscribed myself, and I saw that checkbox. It's definitely easy to miss, but it's there. This doesn't feel like a scam, though, just poor UX that could be improved. And if you're paying by credit card, this sort of issue is usually reversible with a chargeback, so outside such minor friction, most of the feedback that I've seen, though, about Seeking Alpha has been extremely positive. One user said that Seeking Alpha has been a huge help in making investment decisions for him, and he even listens to their lunch and brunch podcasts daily. Another investor loved the well-researched articles and morning emails, though he wished that there was more European market coverage like before. That's still solid praise from serious investors. Now, when I looked into Motley Fool, I came across one reviewer who said that he followed their stock picks, and years later, most of those stocks had tanked. That's tough to hear, but no platform is perfect, and stock picks can absolutely go sideways. I've been burned before myself, so I know that sting. But that review doesn't tell the full story. Motley Fool's strategy is long-term growth, not quick flips. And many of their biggest winners, like Amazon and Netflix, took years to pay off. I've seen others say that by sticking to the advice and resisting panic sells, they actually came out ahead. One investor said that he became smarter, happier, and richer by following Fool's advice consistently and listening to their podcasts. That kind of growth-focused mindset does take patience, but for the right investor, it works. And with Morningstar, a longtime user was furious that they now charge $249 a year to access the watchlist tool, something that used to be free. He called them names for locking this behind a paywall. I mean, that's a big price jump for what feels like a basic feature. I felt that too. But Morningstar isn't just charging for a watch list itself either. Their premium service offers deep data, expert analysis, and screening tools that go beyond what free platforms offer. One user said that he gladly paid the high price after a trial because Morningstar's focus on company fundamentals saved him hours of research. He didn't agree with all the ratings, but that added a layer of critical thinking to his strategy, which I found interesting too. So yeah, it's expensive, but if you're a serious long-term investor, it might be worth every penny. With Zacks, though, the story is quite different. This one's a bit messy. A reviewer said that Zacks had a security breach and his info ended up on the dark web. He also pointed out that their stock rating system, especially the one rank buys, is unrealistic to follow. There's just too many of them to actually invest in without needing massive capital. And honestly, this matches some of my own experience. Like, Zacks leans heavily on their proprietary rankings, but it can feel overwhelming. And the security issue, that's a red flag. Even if it was an isolated event, it's one you can't ignore. And on their surface, their system looks like it promises precision, but it might be more of a numbers game than something you can actually act on. For that reason, I'd personally be cautious about Zacks just a bit more. Let's move on to the real reason you're here, and that's the real value offered by these platforms. Because no matter how polished the website is, what matters is whether the tools actually help you invest better. I'll start with Seeking Alpha. So this is where things get impressive. Their symbol summary pages are like a command center for any stock. You get instant access to earnings, ratings, valuation metrics, and analyst commentary all in one place. I've used this countless times to gut check a trade idea or just confirm my thesis. It saves me from bouncing around 5 different websites. But the real game changer is their virtual analyst reports tool. So these pull together all the critical metrics, valuation, growth, momentum, profitability, and summarizes them in an easy to read format. It's like having an analyst whispering in your ear without the $10,000 a year salary. And then there's the portfolio tracking too. With Seeking Alpha's portfolio tool, I can just plug in my holdings and get tailored ratings and alerts. It's not just a tracker, it actively helps me optimize my allocation based on what the data says. Now, Motley Fool. So, Motley Fool's stock advisor is based on two teams, Everlasting and Rule Breakers. Everlasting goes for high-quality companies with long-term potential, strong leadership, and really good customer loyalty. Rule Breakers, though, hunts for industry disruptors with big upside potential. Between the two, you're covered whether you want steady compounders or moonshot plays. Their screener tool lets you filter through recommendations from different strategies and find the stocks that match your criteria. I've used this when I wanted to stick with dividend payers or avoid certain sectors. All right, what about Morningstar? Well, Morningstar's bread and butter is the fundamental research they have. Their watch list tool helps you track stocks, ETFs, and mutual funds based on the data points that matter to you. I found this handy when managing both my retirement account and my brokerage account. But their screener is where it gets serious. You can filter stocks, mutual funds, and ETFs based on hundreds of data points. It's more customizable than most of the tools I've used, which is ideal if you've got a specific strategy in mind. I've used it to find undervalued ETFs with strong track records, stuff that I never would have found on Robinhood or Yahoo Finance. And Zacks? Look, I wanted to like Zacks. Their rating system is supposed to make it easy. Just follow the #1 ranked stocks. But when I looked deeper, I saw new #1 stocks popping up daily. It's impossible to follow all of them unless you've got unlimited capital. And while they do offer a stock screener and earnings forecasts, it feels like the core product is built around a single number, their rank score. That sounds good on paper, but in practice, it leaves too much up to chance. Plus, that security breach review still sits in the back of my mind. For me, Zacks just didn't hold up compared to the others. Now, even the best platforms aren't perfect. With Seeking Alpha, my only gripe is that the interface takes a bit of time to get used to. There's a lot of information, and while that's a good thing, it can be a little overwhelming at first. And Motley Fool's recommendations sometimes lean heavily on growth stocks, which can feel risky in a downturn. But as long as you know the strategy and stick with it, that risk is baked into the reward. With Morningstar, the biggest downside is the price tag, but you're paying for deep research and not just surface level numbers here. If you're serious about long-term investing, it might be worth it for you. And when it comes to cost, out of all four, Seeking Alpha I think strikes the best balance. It's reasonably priced for what you get. The premium plan gives you everything you need to make smarter decisions, and Alpha Picks is there if you want stock recommendations with a strong performance record. Motley Fool is priced a bit higher, especially if you subscribe to multiple newsletters, but their community, reports, and long-term strategy can justify the cost for the right investor. Morningstar feels expensive, no doubt, but again, it's built for serious portfolio builders. If you're managing a large portfolio or retirement account, that deeper data can be invaluable. Zacks, well, considering what's included and the concerns around it, it didn't feel like great value to me. To see the latest pricing, promos, and exclusive discounts for all of them, check the links in the description of this video though. And after that, which platform is actually worth your money? Well, in my experience, Seeking Alpha delivers the most value. It balances deep analysis, strong tools, and real results without all the extra fluff. So check the link in the description of this video to get started with our special discount and coupon.